Yo, what's up, everybody? How we doing? Good morning, good morning, good morning. Welcome to Pre-Market Prep. Spencer Israel, Joel Elconin, Dennis Stick. Big day today. A lot of earnings. We got inflation number out at 8:30, so we're gonna have to watch that as it comes and react to it in the moment. Anne-Marie Baiynd will join us at 8:35. Peter Tuchman will join us at 9. You're here right now, so hit that like button and check out our slightly new intro. Just slightly new. Coming to you live from downtown Detroit, this is Benzinga's Pre-Market Prep with your host, Joel Elconin.
This is a volatile puppy here, isn't it?
And Dennis Stick.
I'm bidding a penny. I will buy the stock for a penny.
With everything you need to start your trading day. Oh, and suddenly, look at that. Funny how that works. Good morning, Joel. Good morning, Dennis. How are we doing this morning?
Good job, Enver.
Yeah, man. Dennis, you're on mute. We can't hear you, bro. What are you saying? We don't know.
I said good job.
Oh, okay. Okay, just checking.
I'm just giving compliments out today.
Okay. Hear the chart.
He's got a surly mood today. We'll get to that in a minute. We're used to it.
One of those days.
His days where he's gonna be all fired up. Not much going on in the pre-market. We failed at the high from yesterday. We're only down $1.50, 76 a quarter. Very interesting area. This was where we were at before we got Facebooked a little bit over a week ago. Crude, it bounces back here, back in the 90 handle, up 92 cents at 80.56, and you have gold just slightly in the red, 320. 1833.40. Silver, that's up by 6 cents, 23.40. Bitcoin flat at 44,890. And Ethereum down fractionally at $16.50 at 32.50. So Triple D, you did have a busy night last night because there was a lot of big earnings reports.
Mm-hmm. Yeah, lots of action last night. What's interesting, and I find this interesting today too, is a lot of companies, big companies, blowing it away here, but the future's not following. So maybe a little bit too far, too fast. We've had a pretty good run here for 2 days. SPY 445. 2 days ago, 457. It's a 120-point rally in. We're right up at that resistance point, Joel, here. If you look at the SPY, not the futures, but just the SPY, 458.12 was the high on February 2nd. We snuck up there last night and kissed it, and then we sold off of that level, and we also were up there intraday. So we got some big resistance up here at 458. That's the next work. So maybe it's a little backing and filling until we take out that resistance point.
Yeah, and what about the CPI? I mean,
well, that's going to matter.
Yeah,
and what is 26 minutes?
Yeah, you know, we haven't talked interest rates, and we haven't talked about Ben for
Helicopter Ben
for a while.
We haven't talked helicopter Ben for a while. You're right.
A long time. So you know that could shake it. Anti-Jeanette, yeah.
Or the briefcase indicator from Alan Greenspan. Man,
Henry Kaufman.
Who was before Alan Greenspan?
Henry Kaufman.
And Kaufman. Yeah, what years was that? That was before I was in the markets, because when I started, it was like 1996, and I think it was Greenspan already, wasn't it?
Yeah. Oh, definitely.
Yeah.
Yep. So. He did a good job. But no,
irrational exuberance.
It was Paul Volcker.
Oh, Volcker. That's right.
How
That's
right.
If I forget Uncle Paul.
Uncle Paul, yeah. Uncle Paul.
Yeah.
He was stern.
From 79 to 87, just a little bit before my time.
He wouldn't have put up with all this free money. No way.
No, Uncle Paul. He wasn't as easy with the money.
Is he still alive?
I think so.
No, he's not.
He's not.
Uncle Paul? Oh.
So we can't get him on the show?
No, definitely not.
In his next life. All right, this has been a terrible segue here. Let's take us back to the markets. House of Mouse reporting.
Mm-hmm.
Me and Joel. Are you long, Joel? Disney? I forget.
No,
you're not.
Probably.
I am.
So.
I wanted more though, so I wanted to sell off because I wanted to add to the loser, and now it's back to the green. So I don't know what I do. I guess I don't add here, but
You know, Joel, let's keep it that way, okay? Because the last time the three of us bought the same stock, I think it was
actually it was Ford. It worked out really
Ford.
well.
Well, not at first, it didn't. No, so
No.
anyway, Disney. It was nothing to say. It was a blowout report for them. Most of the numbers were very good. Their earnings per share, it was a massive beat. $1.06 per share versus a 57-cent estimate. So they nearly doubled up their EPS estimates. Revenue 21.8 versus $20.8 billion. Parks came in above estimates. Media entertainment came in above estimates. Actually, the parks revenue was a record revenue for it's their parks experiences and consumer products division. Record revenue for that division at $7.2 billion. They ended the quarter with just under 130 million Disney Plus subscribers. Estimate was down at 125 million, so they beat that number as well. They basically beat everything. The only potential red flag was their Hulu numbers were not good. Hulu's going in the wrong direction in terms of subscriber growth and revenue per user. But Disney Plus, ESPN Plus, Parks, the rest of it was all great. So
record revenue pre-pandemic for the parks.
Yeah,
like the all
Is that
time.
right? Is that right? That can't be right.
I mean, that's what Spencer said.
That's what I thought they said.
You might be right. I didn't dig down the report because I was too busy trading all the stocks around it. So I don't know. It's a nice pop. 162. You got major super duper extra resistance, Joel, at 160. And that's where we weren't up there for very long above that. Just snuck above. And then the market maker's like, hey, wait a second. 160 is big. So it's been trading down there. That's going to be resistance. I am long the stock. I got a half size position. I wanted to add the other half if we dipped, but we did not. So I sit back here and wait for an opportunity to add to Disney, which isn't going to come today.
No, it's hard. It's hard to talk about buying it at all today. I mean, that might be the one thing,
Yeah,
thing to
we
do.
don't buy reps, remember?
This is a big rep.
I'd almost like to sell it and rebuy it.
Yeah. I was looking. We closed at what 47.23, and I thought, wow, there was a bunch of highs at 153, but that didn't even blink there. Psychological 160. I mean, I think try and be patient. Wait for it to get back up to that pre-market high. For if you're looking to exit today or potential exit. On the dailies, the next daily high after that is 163.61, and then you get into the big gap. But that'd be a really big move for Disney. You're finding some intraday, after hours, pre-market support here at 157, but I wouldn't hang my hat on that to initiate a long. And I don't know, maybe we'll pull a Google and look what Google did after earnings. Boom. All the way back and filled the gap. But I don't know. It's going to take a while because a lot of people are going to say they missed the boat on it. So it's not going to give it back all in one day. That's for sure.
The one thing to consider, it has given back part of the move here. I definitely wouldn't be chasing just because you're opening right in that resistance point at 160. I don't think there's a lot of short-term upside from here. I don't think it's going to 165, 170. There's bag holders up here. So I'd actually be more inclined to short the stock than buy it, even though I'm long it in the long-term account. But with that being said, I still want to own this long-term. So I think on any major dip, I think you're going to have people, coming in and buying Disney. So that's Disney. Let's go to Twilio.
Yeah.
That's a big mover here.
Yeah, there's a lot of big movers here this morning. Disney, Twilio, Twitter, Datadog. We'll go Twilio here next because it's up 18% this morning.
Yeah.
Earnings per share last night. Nothing crazy. They beat by a penny. The sales beat a lot more than that though. Sales came in at $842 million versus $767 million estimate. Forward looking guidance. Q1 EPS guidance that came in actually way below estimates. That's interesting. Sales came in way above those, so that tells you that there's some weird accounting adjustment thing happening to the earnings. But the top line was very good. That's the bottom. That's the takeaway here was the money coming in, top of the balance sheet looking really good.
Big move. We are off the highs here too. These algos overshoot, got up to 260. So we are $20 down from there. I think the high of the day is in, Joel, at least the high of the after hours session. Kind of just, I don't know, you're now in a
So
gap area. I
hard.
mean, it can do anything
What do you
now.
do?
What's
Yeah,
that?
I said, I mean, what do you do? I mean, if you had a formula for buying it up here, then by all means, go ahead and do it. I would
They
look at
overshoot every time.
yeah.
I mean, they always seem to overshoot. In the case of Datadog, which we can do right along with it, same thing. I mean, Datadog just trade up to almost 180, right up to the highs. Well, not 190. I think got close to 190. DDOG on the report, and that's 176. I mean, these algos overshoot every single time, it seems like, in one direction or the other. And sometimes they get the direction just wrong. I don't know who's running them, but tell you, some of these algos are not as smart as everybody thinks they are. There's some smart ones, but there's a lot of dumb money running algorithms as well.
Boy, the 260 looked juicy on the dailies there, but that's a thing of the past. Let's just reset, just give you something to look at a little bit earlier in the session. And you got three highs. Let's just call it, or no, two highs, 245. That's what I'd be looking for. If I get the 260 out of my mind, I'd say, I want a little bit more on this long. Next daily highs come up at 245. See if they come and get you there. And then if they get you there, then maybe it work its way up. And then I said that very mild half star pre-market after hours support comes in at 234. And the dog, let's see what the dog did.
Datadog also had good numbers, just so we're clear about that. The numbers were good.
Okay, forget about getting close to 190 there, but the shorter term chart, let's see what happens at 181. Now I'm just going 15-minute 175, 181. Right there. There's your early range in Datadog.
Kathy's happy because she's got big positions in Twilio, and ARK was trading up. I think all of her funds are trading up, probably on the back of Twilio, because I think that's a pretty major holding for the majority of her funds, isn't it, Spencer? If I'm remembering correctly.
Yeah.
At least I remember her buying a lot of Twilio. I don't know if she sold it. Seems to be buying and selling a lot more than she used to. But
there was definitely a lull for a while in her.
There's a lull in her trading right now. She hardly makes any moves. Did you notice? Like, when you get these ARK reports, she's been selling some Twitter. She does a couple things, but she was doing all kinds of buying every time we get a dip, and man, that just does not happen now. So I don't know if she just doesn't have as much cash to play with and what it is, but there's very few moves in ARK lately compared to what she was doing before.
I'm looking at the top holdings right now. Let's see.
I feel like Twilio's in there. Maybe I made that up.
I'm in the ARKK. My computer is deciding to be slow. There we go. Twilio is a top 10 holding in the KK.
I think it's a top 10 in a few of them.
It's a top 10 holding in the, I believe, KW as well. That's what I have.
Yeah.
Let's check that right
now. So Kathy's having another good day.
Yeah, top 10 holding in the KW. It's probably in the KF. Anyway, yeah, she's the bottom line. She owns it. But you mentioned Twitter is what was selling a lot of Twitter. That report, I'm actually frankly surprised to see Twitter trending up this morning, because that report was not great. They missed basically across the board. Their earnings per share missed by a couple cents. The sales came in a little bit light. The sales guidance was I guess was okay. But the Q4 monetizable daily active users grew 13%, and I want to bring up this chart that I showed on the At the Close show yesterday.
You're gonna get a kick out of this one, Dennis.
It's courtesy of my friends at Visible Alpha. They just sent me this chart of Twitter's monetizable daily active user growth through the years, and there we go. So you can just see that the red line is the year-over-year growth, and so that huge spike was. It was during COVID. The left half of this graph is the actual. The right half is future projection.
Doesn't look good.
Is future projections here. So
I know.
this is going back. Really,
I don't like that growth rate.
Really, just look at the left half of the graph, because that's what's already happened. And you can see it goes back to 2016. So we're going the last 5 years here, and you can just see an uneven growth trajectory. COVID helped a lot, and COVID or Trump. I'm not sure whatever. I think more COVID, because you saw a huge spike there in 2020. So
elections.
COVID helped a lot.
Elections.
And elections. That also probably helped. But anyway, the growth rate 13% is not really going to cut it here for
At least it's breaking the downtrend. That's the one thing I will say on the chart is it's trying to break the downtrend. It is a good report. 40 is huge. Psychological barrier. It looks like technical resistance on the chart. Needs to get up over 40 to continue to be on the bull train. I'm just not a fan of the stock. So I'm not really a fan of the company either. So yeah, Money Mitch, I'd take my peanuts on.
I also I missed the buyback. Sorry. $4 billion buyback plan.
Oh, they always do the buybacks in the wrong times, like all these companies, so I don't get that excited for a buyback either.
That's better than when it was
I'm
at
just
75 and
I'm out
80.
on. I'm not gonna make a call on it. It's a tough chart. 40 resistance.
Spencer and I went over this one in pretty good detail yesterday. The At the Close show, because I was thinking I was just leaning bullish into the report for some reason, just because of the way
That's right.
Snap acted. And we did a pretty good look at the options and the open interest, and the open interest was really crowded. The predominant on the call side was 39, 40, and 41. So I think you just had the optionality coming into play here when you got over 40 and then briefly over 41, just trying to, trade against those options. So I'm looking for a little, 40 is the number right now, and maybe we could get back up to that pre-market high. I'd be a little bit interested on the downside, maybe if it comes down to 38, because 37.92 was the high from yesterday. But nope, I'm out of it. I got out of it in upper 50s, and it's just here it is.
Sale. That's a good sale.
Yeah.
Joel. You don't usually
think
sell
about
stocks.
this, Dennis. All right, when did the stock IPO?
15, 14.
Where was it when it IPO?
Where was the first print?
Oh,
I can't remember.
What was it?
38. That was Facebook.
It's 40, right?
40.
40 bucks.
40.
That's gone nowhere.
And then it went to 44, right? And then it went to what, 13 or 14?
Yeah.
Then I don't know why the heck it went to
70.
80. Yeah,
Way
80.
overdone.
Yeah. So it's gone nowhere since its IPO. And it was like it was out there. It was out there. Twitter was out. I mean, I don't know the timeline between Twitter and Facebook as far as when becoming Twitter IPO'd after Facebook, right?
Facebook
it did. It's
12.
just they missed the boat. They missed the boat.
And TikTok's coming for all these companies too. Don't kid yourself. I mean, they're gonna feel pressure eventually from all kinds of competition. I don't know. Snap, Twitter, Pinterest. I have no reason to own any of these stocks in my long-term portfolio because they're not cheap on evaluation metrics. And I don't from that chart you just showed, I don't see the growth.
What was the revenue, Spence?
What was the revenue? 1.57 billion versus 1.
So they're growing the revenues. I mean, that's probably their best revenue number, right?
They're trying.
Yeah.
Let's go look. Well, the revenue.
There's better places for your money than Twitter. That's what I'm
good way
say.
to good way to sum it up.
Yeah, year over year, there is revenue growth and there is earnings growth too. Let's not act like there's not. They're growing the top line and the bottom line here, but I think that Dennis's point sums it up nicely. Right?
Not a fan.
There are probably better places to put your money, such as we already covered those actually. We already covered Twilio and Datadog. What about CyberArk today? Up almost 11% now. On their earnings report.
I wanted to buy this on the pullback. This was one I wanted to re-add because I actually played this already once from one. I had it at 106. I sold it like 170 on the longer term account, and I was like, if it ever gets back down to that 106, got down to 125, and obviously the last sell off there, but not quite down. Now it's moving back up again. So I don't know. Again, I'm not buying reps. The name of the game is not buying the stock when it's up 10% because a lot of times they do leak.
Interesting zone here. The start of the zone starts at 158.08. We've taken that up, but look at this. 3 highs in the same area, right about 164. How high have we gotten? We've gotten to 163. So it's a zone, but I tell you, that 164, at least the first time up after 3 daily highs there and then a big drop off, a lot of people are getting their money back in 164.
You know what stock we never talk about anymore? I didn't even realize they reported this morning is Irobot, We never talk about Irobot, IRBT. They report. I'm
It
sorry,
always misses.
they reported last night. The earnings were not. I hadn't looked at this chart in a long time. Earnings were not great. They're still not profitable, losing money. Earnings per share lost $1.05 per share last quarter versus a loss of a 91-cent estimate. So they came in below that number. Sales of 455 million versus a 463 million estimate. So they missed that number as well. They gave some guidance for the year. It was fine. It was in line. The EPS guidance.
They were profitable at one time, though, weren't they? Irobot.
Go into the pro and check.
I'm pretty sure. Yeah, even look, the guidance is $2. So
yeah, they were. Yeah, they
make
were
money. They usually do make money. I don't know why. The last couple quarters, maybe it's because pandemic related or whatever. But I mean, here we are, $2. You're looking at earnings.
They had a couple really big quarters right in the throes of COVID. Q2 and Q3 of 2020, they had bonkers quarters. So maybe their growth just got pulled forward.
Maybe. So, but if you go $2, just round it off, $60 stock. So 30 times earnings.
Ugh.
You're at a major.
Big level.
There could be, and there could be some people who are like, oh, I'm looking for something to buy because I missed the move. Well, I get another shot at Irobot now. So I wouldn't sell it down here if I had it at 61. And we have seen Irobot do some funky things on earnings. It's fairly thin. So it's not like, it's only traded 22,000 shares here this morning. So sometimes these things do turn around. I'm not necessarily buying the dip on it, but I wouldn't, if I owned it, I don't think I'd sell it here.
Three daily lows between 58.44 and 59.27. So rounded off 59.60. Must hold level. We did contribute to the earnings this quarter. Lisa did buy.
Joel, congrats.
Lisa bought one of those things. It goes around and goes around and around. And
do they have the lawnmower one yet out? Has that come out yet? Remember they got the Roomba for your lawn? Irobot's been making.
I'm
pretty sure. It was. I saw like a video of it like a year and a half ago. I'm assuming it's out there. But that's kind of a cool product. Mows the grass for you.
Anyway, Irobot used to be a stock we talked about all the time when it was going from,
I got reddited, right, in January.
Oh, did you see the move? Go back and bring up the chart.
Yeah,
how crazy. Reddit was just giving gifts to so many long-term shareholders. Just so many gifts. And this thing went, short squeeze, went from $100 to $200 in like a week.
Yep.
I mean, look at that candle, Joel. You look back in the Reddit bubble that was created from just, craziness around social media, nothingness, was such a gift for so many stocks. There's so many of these. Anything that had a high short interest looked like this. And man, those stocks all came back down. There's very few that, stayed up, if any. Wow. 100 to 200, what a gift. $197 was the high. And literally a week later, it was like 117. It just continued to leak ever since 60. So bag holders all over the place. Moral of the story is don't chase these stocks that are posted in social media, because a lot of times when they have these big hyped stocks, the hype eventually goes away and they eventually leak it all out. So, and if you're a long-term shareholder, use those opportunities to sell. Remember I had my Corsair Gaming? Remember that one back in, and I was bag holding it. I'd bought it like $37 and it was down to 32. And all of a sudden, it was like the hot stock on Reddit this morning, and it was up like 30%, like on just because it was being talked about on Reddit. I was like, sell, 42, and all the insiders went sell, sell, sell. And of course, there's now 21. Yeah. Use those opportunities when your stock is hot in social media to get the hell out.
What else was there? I just did triple BY. I did.
Well, there was cost KOSS.
Oh yeah.
That one went crazy too.
Yeah.
Oh my gosh.
Yeah,
cost $3 to $127.
That's a weekly chart. I brought this into a weekly.
It's just insane. The moves were insane. There was so many good ones. There was like some other ones in there
Muriel
too.
Siebert.
BlackBerry was fun for a minute.
I actually participated in the BlackBerry one.
Me too.
I actually did pretty well in that one. Did you too? You were in that one too?
Yeah, I sold it. I was like, this is I bought it weeks.
That was a good one for me. I did good on that one.
I bought it weeks before, I think.
I think I made like 70% on that. Like a couple of weeks. That was a really good one.
That was a fun one.
Yeah, that was a good one. That's came all the way
That
back down
was
too.
back
They
in the
all come back down
back
the
in the
mountain
good old days,
eventually.
right? That was
You
back.
hold long enough on the long side, you lose on all these things.
All right. Let's real quick. We'll cover like one or two more, and then we'll have to pivot because we have the CPI number coming out in 4
I gotta go wide.
minutes from now. Let's just do like Coke and Pepsi real fast, right? Together because they both reported this morning.
What's the difference?
There is no difference. Coke earnings beat, sales beat. Pepsi earnings beat, sales beat. Yeah, same thing.
Everybody hiding in these consumer staples. Again, if we're going to a risk-off market, I'd expect them to start leaking too. I don't want to own any of these stocks. I don't want to own Procter & Gamble. I don't want to own Coke. I don't own Pepsi, unless you think we're going into the trashy markets again, where they're going to start hammering stocks. Then these can actually hold up. But these are defensive names, lots of money hiding in them, and they're not cheap. I don't want to own any of these stocks.
Boy, oh boy, Coke. If you're buying Coke near $63, up on $2 on the day, you got to look at the average daily ranges in this thing. I mean, it's just and conversely on the
They
downside
went up
too.
$2, on the
Yeah, it
earnings
went up
report.
and then went down to 59.50.
Oh my
All
God.
you need to note about is there's a double top at 62, 32, and 33. Yeah, that's your. There's really no resistance. That's it. That was it from the last 2 days. So longer it takes to get up there and take those levels out, I think Coke is due for a little bit of a pullback. And even 62. Wow, that is the all-time closing high. So I think even see sellers at 62 today. Haven't looked at Pepsi in a long time. They're a little bit more diversified. That traded up, but only 26 cents. You got your opening right into 173. Boom, three highs in a row. That's resistance. Got to get through 173.
It
Triple D,
is
it's 827. Do you
28.
want to do
Yeah.
one more, or do you want to bolt for the number?
I will bolt for the number here. I'm going to go wide because I don't want to get picked off and sold, or bought. So we will see what happens here in 2 minutes. It's probably going to be a wild child.
Estimates are pretty much in line, and the consensus seems to be in the low 7% range, so 7.2, 7.3%, somewhere in the ballpark of that. That would be an increase of last month's or the prior month's a rate of 7%. It would also, if we did get 7.2% inflation, that would be the highest inflation rate since February of 1982. When what happened? When the Bengals lost in the Super Bowl. So let's keep that on our radars for Sunday. But 7.2% is the estimate for the CPI data out a minute and just about a minute from now. And let's just keep an eye on them. We'll watch the TLT. We'll watch the banks. We'll watch tech. We'll watch the Qs. And let's just see what happens.
Right. I mean, on the upside, I mean, I could give you resistance because that's what the numbers are providing us with. You had the high from yesterday at 82.50. You had the high of the move at 86, 45.86. Your current high today is 83.75. So enough said. After that, and really, honestly, it really opens up. There's not a good daily number that I could give you. 4,600, maybe psychological, but right now the 4-star number in the upside is 45.86. If this number comes in super hot and they don't like it and they take out the pre-market low, there's not much in there. There's not much in there until the intraday low from yesterday, and that was at 54.50. So let's go wide. Let's see what let's see what the interest rates are going to be. January CPI.
To those who care, we also are going to get jobless claims, but nobody cares about jobless claims. We only care about inflation. Was inflation up at 7.2%? What the heck? We have 0.6% month over month increase. Nah, we care about the year over year growth. 7.5%. It was a hotter number than expected. I told you the estimate was in the 7.3, 7.2% range. 7.5% increase in the cost of goods in January of this year compared to January
Coming up
of
on the
last
pre-market
year.
low. Pre-market low right
Wowzers.
here.
All
Right
right.
here. Yep. Right here.
That's
We are. If they're going to defend, the Bulls are going to defend here. 63 and a quarter was the pre-market low before we spoke. or before we had the number. There's 64. They're knocking on the door. They took out the pre-market low here. Still a good number. Now in a 45.50 handle. Interday low. If you thought you missed a good buying opportunity at the interday low from yesterday, that comes in at 54.50. That's 5 points away. So we are giving back not all of the gains from yesterday, but some of the interday gains, right? Because we went from 54.50. So hot number. They're hitting the market. There goes 57. There goes 56. There goes 55.75. We're almost right back there, Spencer. 54 and a half. It doesn't look like it's blinking. We got some heavy selling going on at the top. Well, we were at the top of the range. Here we go. 54.50. Print, print, print. Come on. 55 bids stacking up. So there you go. Not like there goes 54 and a half, like nothing. 52 and a quarter. They're just leaning on this thing. All right, let's go to some stocks here.
Well, yeah, you got tech broadly selling off here, so you can go to the
You probably got
Qs.
everything selling off.
Well, Apple, right? You go Amazon, you go Google, you go to mega cap. Those all. Well, actually, just Apple really. But yeah, I look at the Qs first. I look at the TLT second, and I look at and I just go from there. So you are seeing pretty much whatever was up things are still up, right? Like Disney's still up, but just they're starting to point down a little bit. What else am I seeing out there?
Little TLT, boom. There you go. That TLT. I'm gonna move this up. Oh, I just want to check the banks.
Yeah,
Bank
just to
of
do that.
America. Whew, look at that, straight up. I'd be kidding. Keep an eye on 50 in Bank America, folks. 50.08's been the high of the move, and then 50 we got to 50.02 the other day. So keep an eye on that if you're looking for potential resistance. Hasn't been up there since October of 2007. JP Morgan probably getting a little boost off this. I think
Yeah.
we had a high in the 158 handle. That would equivalent to that BAC at 50. We are now in the 40 handle, 45, 46, 45 and a quarter low. So they're pressing to get these stops or whatever's in here in the market, but giving it back a lot of gains. If you're looking for a reset of yesterday, or actually the overnight low, that came in at 45.17 and a quarter, and that would really be a butt kicking. So the banks are up, TLT's down. Boom. And you know what? Triple D made a good comment this morning too, before even the number. He said
Yeah.
there were some big stocks out with pretty good numbers, and the spoos couldn't get the spoos couldn't stay green.
It looks
So
like
that was a good observation
looks
by
like the
him.
market was nervous, and rightly so, Joe. Rightly so. Hey, Jeff Kinsey says, Joel, you sound like an auctioneer. Maybe in a past life you were an auctioneer, Joel. To those wondering where. Sorry,
You
go
know
ahead.
what I used to do, and what I wanted to do when I was a kid. I wanted to be announcer at the horse races.
Right.
I used to do that into a little little tape recorder
To
and do that.
those wondering where the inflation was highest, it was in food, electricity, and shelter. It was the largest contribution to inflation, up 0.9% in January, following a 0.5% increase in December. What else? And we'll bring in
Free falling now.
I will point your attention to Twilio, which, as I said, is still up this morning, but has turned now and is making a new low of the day.
Yeah, it was just
Right?
yeah,
Yeah,
new low
new low.
since 4 a.m.
Right.
That is correct. I mean, when you get these kind of look at the House of Mouse there. I mean, it's kind of not blinking. That's interesting.
Yeah.
That's hard. I had the good news. So we did the banks. We did what other earnings stock? Datadog. I mean, they
Yeah.
got
Again, turning right, pointing
yeah
down now directionally.
about Twitter.
No, not really. Twitter. Well, yeah. Twitter's kind of quiet. I don't know.
Yeah, you're getting hit too. I mean, when there's that, when there's that kind of movement in the S&Ps, there's just people not sticking out bids indiscriminately, and you never really even had the head fake up, right? you never really got the like, oh, it's not the algos were just all over this, and they hit up, we were up resistance, still making new lows for the session. Has all the makings of an ugly
You know
day.
what's so interesting too, Joel, is Bitcoin sold off on that. The crypto sold off on that. ETH and Bitcoin both sold off on that number. I'm
You
still.
know, I
What,
can't find a correlation.
me neither. I'm so confused.
Because they rallied it on some other good numbers, right? When are good? Well, they rallied it on bad inflation numbers before. No, it has
What is
really just
crypto?
as a minor.
Well, okay,
You
fine,
tell me.
fine.
Risk asset linked to
Fine.
Kathy.
Crypto is a risk
There's a
asset.
huge relationship. It's
Fine.
not defensive. It's not just its own thing. I'm just talking in the background as I'm trying to
Sure.
trade, but I can't stand that we're not linking this relationship, which is blatantly obvious.
Fine.
It's linked to growth. It is linked to growth stocks. It is linked to ARKK. It is linked to Kathy Wood. It is a risk asset. It maybe wasn't always that way, and if you go to the long-term data, you won't see that. But in the last year, it is clearly correlated with risk assets.
Fine. All right. It's a risk asset. But that's not what they said for the last decade. Oh, it's an inflation hedge is what they told that's what they told us. So all right, whatever.
Well, you can't
Whatever.
They lied.
Let's bring on Anne Marie Baiynd here from the tradingbook.com. I'm sure she has thoughts on all this. Anne Marie, good morning. How we doing?
Good morning. I'm great. Do you hear me all right?
We hear you all right. We see you all right.
Okay, great.
What do you think of all this?
Well, I think a lot of algos are involved, and so they're just going to go wherever anything is running, right? They're going to look for volume. They're going to look for movement, and then they're just going to hop on it. And I think, I think Dennis's point is completely fair. At the same time, the reason there's this disconnect is because they're just going where the movement is. That's all they're going after, right? The vol has slipped off just a wee bit because all the big names have pretty much come through the pike from the earnings, and then now they're just going to run with what is, because nobody knows what's going to happen. Everybody's trying to sort of game the edges. They're all standing in the doorway and they're saying, all right, if this happens, then we're going to do this. If this happens, we're going to do this. But in the meantime, we're going to straddle the fence and then wait for the big move, and we're off to the races. That's the only choice, sadly.
All right. Well, it's interesting. That I don't really know how to respond to that. Honestly.
I didn't mean to make you go to wait. He's not saying anything.
No. I just didn't really know how to respond to it. But it's interesting that when you and I were emailing yesterday, you said you were watching bond flows. This has been a hot topic of debate. Not that they're doing it anymore, but when the Fed was buying. When they went to the market to buy bond ETFs, and tell us what you're seeing out there in terms of bond flows, because we think of the bond market as the quote unquote smart money, right? So what have you noticed?
So the bond market is doing exactly the same thing the equity markets are trying to do. They're trying to position so that whatever happens, they're going to be able to quickly shift and move into the space. Now, the problem is, in the bond markets, very small moves can make people tremendously wealthy, or they're feeding the pigeons. So that's something very, very important. So the thing we were talking about is really not so much what the bond flows are going, what they're doing, but what the noise is and the chatter is out there about what they're going to do. So quick recap, the bond market is about 10 to 13x the size of the equity market. So it's monstrous. If rates rise, then bonds will fall because yields will rise. Inverse relationship right there, which means those bond guys are going to have to look in other places to get alpha. So what a few of them are saying is that they're moving into the ETF, but not bond ETFs. They're moving into equity ETFs. And so I've heard this from two different fairly reliable sources, but now I'm digging for information that says, is this true? Because you never know if somebody's talking their book, if they're trying to throw a red herring out there. You just don't know. I mean, we play games in this market, you know? So
How would you monitor that? I mean, would you be looking at the volume,
I'd be
or
looking at ETF flow. And I would not be looking at emerging markets ETF flow, because those guys are going to get crushed if rates rise. Because if you borrow in dollars and you don't raise your own rates fast enough and the dollar moves faster, then your debt gets bigger simply because it takes more of your money to pay off in dollars.
Well, wait, they are raising, aren't they, over in Europe?
Oh, no, they are. A
Yeah.
few of them are.
Right.
But Europe is not really an emerging market.
Right.
I'm
Okay,
talking
you're right.
about
Yeah,
Latin America.
fair.
I'm talking about Africa.
Fair.
You know, I think Russia still falls in there. That's been an emerging market for 70 years. I don't know. But nevertheless, that's really what we're going to have to watch for. We're going to have to watch for big ETF flow into SPY, Qs, IWM, which we're seeing the IWM behave a lot better. It's moving out of its little pockets. It's got some things to prove. So we'll see how it fades down into its lower zones. It needs to hold about 2040. If it holds about 2040, that's the RTY, the Russell there. Then there might be a spot there. But look at the SPY, the Qs, the IWM, the XLF, the monsters of the ETF space, all the vanguards, all of the Vanguard ETFs, because they're places they can sort of nibble in. Now, what's going to happen there? People are thinking, hey, rates are going to rise, equity markets can't handle it. But if the rates are rising and the equity markets go, hey, we can't handle this kind of move, and it fades, and the bond guys go, ooh, I'm buying the dip, the market's never going to move down in any significant manner.
So in real, how are you personally positioned right now?
Okay, so I am moving. I was in a very big cash space, and so I'm sort of moving back into neutral / bullish formations. And so I'm looking further out. I'm thinking when the first rate hike, there are people that still think that Powell's not going to do it. I mean, they're still thinking.
That's not what the Fed funds futures market says.
Well,
No.
Again, they're hedging that space. So what I think they're doing is going overboard on what the Fed funds futures market is saying, because some of them are saying, he's going to raise 5 times. He's going to raise 7 times.
Think he'll go a half? Think a half? Just or do you think the market's too sensitive to that? If he goes a half the first time, because if he goes the half the first time, then then he shows people that he's serious.
Yeah.
Right.
Well, there's 25% chance of that according to the Fed funds futures market. So
yeah, I wonder what it's a little bit higher than that after that number this morning, right?
Probably. Yeah.
What about these growth stocks? What about some of these? Are you milling around? Are you and Kathy in cahoots together? Are you getting down?
that's it.
She and I, we're on.
No, man,
No.
oh man.
How
many times have you seen it peek its head up and then just whack-a-mole?
And
what do you think?
That's really the storyboard there, right? I think she's very bold, but I also think she's got a 10-year horizon. And a lot of people that come in and go, shit's dropped, blah, blah, blah. I think a lot of the smart investors sitting in the fund are just saying, hey, listen, this gal's got a long horizon. She says that. All her narratives are, this is the long place. I'm going to, do this. And I want to do it transparently. And everybody's all in a kerfuffle about that. So she's great to put a face in a dartboard at. My suspicion is with the growth stocks, it's going to all depend on what their debt is, right?
And their
Because
cost of their debt's going up right now as
exactly,
we speak.
and money, unfortunately, money rules the world, and so you just look at how much is it costing them to handle debt. I know a couple of fintechs right now that are paying $100,000 a week on some of their outstanding loans,
Ooh.
and it's an adjustable rate.
Oh,
Listen,
oh.
there's going to be some trouble. There's going to be some trouble. Financing of debt, everybody's been like, oh, yeah, sure, whatever you need. And, the rubber's going to hit the road sometimes. So that is, I am staying clear of growth. Here's where I'm going.
Yeah.
Commodities, both hard and soft. I've been singing the same song for what?
Yeah.
8 months, 9 months, right? Lithium, uranium, whatever, nickel, cobalt, copper, aluminum, and then the soft ones, cocoa, wheat, soy, milk, rice, all of those things, you just wait for the dips and then you nibble in, right? Because a lot of them are caught sideways. Now, here's the hard part. The rates are going to raise. That is going to put some pressure on those commodities. But at the end of the day, we are going to see, I believe commodities are running into their soft commodities, particularly, are going to run into their super cycle. They've been down for several years. They're going to start turning around and moving up. If you look at anything, any kind of grid you can find that says, tell us how this commodity did this over the, actually, Visual Capital just did one. I'll tweet it out afterwards. Okay. And you'll see that they'll go up and up and up and then all the way down and then up and up and up and then they'll go all the way down. And this is what's been happening with everything, to include oil and the like. Now, we're going to have some political things going on with oil. So, and I mean by that, not so much, all the saber rattling across the waves, but coming into the midterm election cycle, they're going to start to try and pull on these strings just a little bit so that, it doesn't take $85 to fill up your vehicle, which...
All right, wait. Okay, so commodities, you like that? We know that. What else?
Well, wherever I'm going to stick with the broad indices.
Okay, spot
trade. Yes.
Yeah. Okay.
I'm going to trade those cycles because everybody still contributes to their 401k. There's the possibility that what these bond noisemakers are saying actually does occur, and they slip into that space of trading those equities. I'm just going to sit where there's broad exposure, and I'm going to sell puts on the massive dips. When the dips come, I'm going to go way out of the money, and I'm going to, sell a delta of 20, 12, something like that. And it's just going to keep me safe. I'm not going to make millions of dollars, but I certainly am not going to put myself in the space where I'm going to get, Thor's hammer to the face.
Yeah.
Just in reference to soft commodities, we're generally referring to commodities that are grown rather than mined. So like you look at, I'm looking at the soybean chart here, right? Just at as high its level it's been at since April of last year, and then you got to throw cocoa in there, right?
Yes.
That's a soft as well, and all these charts, I mean, they are they're looking like they're just raring to go. Also, sugar falls into that. Soft
Now,
commodity,
sugar,
you can eat them. You can eat it.
Yeah, and quickly, Sugar and cocoa are always going to spike in the early part of February because of Valentine's Day. And that's because traders go, oh, it's February, Valentine's Day's coming. I'm going to go buy some cocoa, or I'm going to go buy some sugar. So
Wait, is that really a thing?
Honest to goodness.
All right.
What about
Look
OJ?
at Hershey. Look at Hershey.
That seems okay.
Hershey.
That seems dumb, but
I know.
But
listen,
Look at Hershey,
a
all-time
lot of
high.
things we were done. Yeah, right.
Whatever.
So when it's over, just wait for the dip, folks. Don't jump in and go, oh, I got to get involved. And you might go, well, didn't we just have a dip? Yes. But what does a dip run into? Before it runs into sellers. And those sellers are going to come. They're either selling because they bought and they got trapped, or they're selling because it's resistance and they want to open a position. So your thought should be, well, I got to see where the buyers are going to defend that so that I can take that position. I love you just wait a little bit for the fate. There's just, the ETFs to watch for things like aluminum, the hard commodities. Somebody just reminded me of JJU the other day. Go to the Vanguard or go to the iShares. You're going to find them. One of my favorite, I love DBA. I don't love Moo so much. I think cows are kind of, and livestock. I don't know what they will spike. Hogs, the whole thing, those will spike. I just don't have a feel for those guys the way that I have a feel for grains and the like.
Oh,
So
live hogs been moving up too.
Oh
nicely.
my gosh. Lean hogs have been a tear, but that's because they had to cull oh my gosh, I think they culled like 600,000 of them. And they'd been moving up because nobody could get feed to them and they were dying. And yeah, the COVID thing has been really, really rough on people that trade livestock.
Anne-Marie, what about the banks? I mean, we're seeing, if we just go to today's action here, everything is red on my screen, but the banks are ripping higher. The financials are loving a 7.5% number because you know what everybody's going to be saying? They're not just going to go a quarter. They're going to go a half now. I mean, this just gave them the ammunition for the Fed to not only go a quarter, they're going the quarter. Right, now that we saw this number, because it's not getting better. Right. And worst number since 1982. I think they could possibly go a half here. So what are your thoughts on the banks? I mean, they were obviously a great opportunity to buy on the dips. They had decent earnings and they sold them all, and that was an opportunity here. But now that they've run, what are your thoughts on the banks going forward?
Okay, so my thought for the strongest banks are really always the ones in the middle, those middle type banks like not the very biggest ones.
Like the regionals?
Yes, the regional bank. What is that? KRE?
KRE.
Yeah. So my thought is regional banks are the place to sit as opposed to the great big ones. There's going to be less volatility. They usually manage their finances in a much more rigorous way. So I like those. Of course, banks have more ways to make money if the interest rates are higher. They'll make money on the sweeps. There's so many ways for them to make more money with just, 25 basis points. And
yeah, I would just throw in one caveat with the banks. And I mean, I would look at their loan portfolios too.
Certainly.
Who's making, who's making loans to some of these big tech companies, or that would be something. Exactly. That's the only caveat on that.
Interestingly, most of the big tech companies are using those big banks. I don't know any.
A lot of them don't have debt. I mean, like Apple, the only reason Apple has debt is because everybody told them you got to have some debt.
Well,
but a lot of them, a lot of the majors are debt free, actually.
So, of course, those sit in that space. I'm thinking more about all of the tens of thousands of startups that are floating around there, and the hundreds and hundreds of them that have hit IPO and have all of this debt
Yeah.
sitting around in that space. They do go, most of them are getting financing from the bigger banks. Regional banks, they know their customers. They can go out and see the houses they're making loans against. It's not, the second a bank starts to spread its tentacles and they can't see physically on the ground where they're lending money, fraud is easier to open up. And so that's why I like the regional bank space.
All right, Anne-Marie Baiynd, thetrainingbook.com, link on the screen, and link in the description. Anne-Marie, always a pleasure. Thanks for coming on today.
Thank you so much.
All right, Dennis, you were gone for quite some time.
Yeah, there's just
That was a big one.
It was moving, man.
Yeah.
I mean, they're hammering everything they've been buying the last 3 days. They're literally hitting all those stocks that they have been buying hand over fist for the last 3 days. With that being said, I mean, it's a hot number, but there's still a sentiment turn here in the overall market where the market wanted to be a little more risk on. So I do think you will get some dip buying in some of those growth names. If this was 2 weeks ago, I'd be like, bat down the hatches. We're going down 1,000 Dow points today, or or 100 S&P points. I don't think that's the case because I think the mentality, to a certain extent, has changed, at least in the short term, where people feel like, okay, they really ran without me. Some of these stocks really ran without me. And this is my dip opportunity to come in. So I think you will see some dip buying. I'm not sure if that's going to be the right move or not. I mean, when you really sit back and look, you're like, holy crap, 7.5% reported. I mean, this is a serious number. And, they've got a serious problem, the Fed, and they know it. And they honestly are going to try to deal with it the best way they can. But again, they're handcuffed to a certain extent. And we've talked about this before, because if you just start jacking up rates, 7-8 times this year, what does that do to the housing market? What does that do to the economy? What does that do to the small person who hasn't participated in the wealth effect? I mean, there's a lot of considerations here where I don't think can go, and start raising 5, 6, 7, 8, 10 times, which is what it needs to get the inflation in check. But I don't think that's going to even help. A quarter point hike, a half point hike isn't helping with the inflation. The prices of stuff is continuing to go up all around us all the time. So it's not surprising that it's 7.5. I mean, I think the real number is even significantly higher than that. I mean, cars, I was, like I said, I was driving through the parking lot and looking at the prices of cars, new cars, and I can't even believe it. Like, I can't even fathom that these prices are this high.
I just saw this. I looked at the Fed Funds futures, the Fed Watch tool on the CME. I looked at it yesterday afternoon, right? I think I looked at it right before the close or right after the close, and it was saying a 25% chance of a half a point rate hike in March. That's what it said yesterday. Today, just this morning after the
35.
It's gone up to like 40% chance.
Yeah.
That's the first thing I thought too. As soon as I seen 7.5, it's like, oh man, they could go a half.
Yeah.
That's the first thing that crossed my mind when I saw that come across the screen. And that's why obviously I came on and said it right away. I said it when I came back on from trading. I was trying to get out of every growth name that I had, that hadn't got hit. But
what? And when's the next meeting?
March 13th, I think. I don't quote me on
if
that.
the market could stay up here, in this area, I think
March 21st.
March 21st. I mean, that's 5-6 weeks away. If the market can hang up here, hang out 4,500, 4,450, 4,500, I think they'll do a half. But I think if the market gets real nervous ahead of it, and we start heading back towards 42,1275, I think they're data dependent and they're market dependent.
They're market dependent more than they like to believe. And you're exactly right, Joel. If the markets just start rolling over here again, then they'll back off. But if the markets hold up, they could go that half. I mean, I look here and you just analyze and you think, try to put yourself in their shoes even. I mean, it's a difficult position.
Not, I don't envy them at all.
No.
It is not a fun day to be a policymaker, not a fun day to be in the White House, not a fun day to be at the Fed, not a fun day to be in their shoes right now.
No, definitely not.
I don't envy them because this is a political
I
issue.
think if you get a bounce here, and don't kid yourself, there is a lot of people who are like, "Oh, this is my big opportunity to buy." I think it'll be a mistake, though. I do think if you get, for whatever reason, if we bounce back a bit here after the open, I think use that opportunity to lighten up those growth names because they've run pretty far. They're getting hammered this morning. I hate to sell, so I got out of a few of them on the number because I was like, "Oh, I just got to hit bids." So I got out of a few. I had, like I said, I had 9 growth names, and I should have maybe sold them all before the number and not took the chance with it. But you want to give it a chance. On that number, I actually was able to get out of a few of my stocks. I had Beyond Meat, believe it or not, on. I got out of that just under it just hadn't got hit yet. I'm not saying sell it down here at 61, down 2.5%, but there was some opportunities around the number just to get out of some stuff. I had AMC on for a bit, but I'd sold that yesterday. I put some growthy, ugly names on. This was just for swing trade longs because I kind of thought with Peloton that they were going to get bought, and they did for 2 days. They've bought all that stuff, but this changes the narrative to a certain extent. So I think you've got to be selling those stocks onto rallies now.
Yeah,
and
all right,
includes the Kathy names too.
Yeah, I mean, we're having a hard time catching a bid here, folks. Looking for the low, the actual true low from yesterday was 17.25.
Messy.
Yep, and maybe your focus number for the day should be that close from Friday, 44.9250. I think if we stay above that, we got a chance to do some more work in the 4,500 handle. But keep an eye on 17.25. I'm gonna hop off, guys, and catch up with you later on.
Let's bring on Peter Tuchman and see what he thinks of all this. He runs Wall Street Global Trading Academy, trades down on the floor. Although he's not there right now. Peter, good morning. Hot inflation number, transitory, not so much. 7.5% increase in prices. Basically, we're at almost a 40-year high. Market obviously reacting, tech selling off, growth selling off broadly, banks ripping. What do you make of all this?
You know what? I don't think we should be surprised, and I don't think that. Look, we have to really see how it plays out on the day.
Yeah,
inflation is inflation, and the severity of it, and all the issues around it, and the attempt at a reopening, and the reasons for it have been on the table for a while. Why haven't we really engaged it on a prolonged basis? I'm not clear. It's the same thing as the story about the taper and interest rate raises in 2022. They've been on the menu for a while too, yet that wasn't until recently that we actually engaged it within the marketplace, and that kind of anxiety and sentiment on stocks and whatnot, and the yield. So it's not a great number, no question about it. We know why it happened. Okay, it's the reality we're going to have to live in for a while. Will the market be able to absorb it? I believe so. Look, there are other factors that are going to come into play. The fact that the labor force is going to have to get up and start going to work. They are going to get paid a little more for it. It's hard to sort of understand there's no playbook for coming out of a pandemic. There's no playbook for a complete global economic shutdown. There's no playbook for what really, think about what we are in the middle of still and have just gone through for 2 years. Let's be clear about it. Let's think of where we wouldn't be if the stimulus package hadn't hit us in March and we were able to get back to even, and hopefully the economy will catch some of the backwind of the marketplace, right? I mean, I think we're really lucky that we're not on a friggin' breadline at this point, to be perfectly honest with you, just because of where we were for 2 years, where a lot of business is, where supply is.
Yeah. That's a really good point. The inflation sucks. No one likes this. This is not fun for anyone. But I think it's a good point to consider the alternative that we literally, I don't know how narrowly, but we avoided a depression, right?
Let's be clear about it. I know people jump on J Powell and all this other stuff and the Fed and this and that, but I try to, I'm a cup half full type of guy. And I try and understand really where we are, where we could have been, and where we're going.
That's fair. It's certainly fair. Now, that being said, the call from Jerome Powell, last summer, that the inflation rate the was going to be transitory. He wasn't calling. He never said that inflation itself was temporary. He said that the increasing inflation was temporary. That seems like it's going to be a call to live in infamy now and just come back and bite him forever and ever and ever. Because now again, this is the 5th month in a row. No, sorry, the 8th month in a row that inflation was over 5% now. It sucks, Peter. Like it
You know
sucks.
what? Listen, let's talk for a second.
Yeah.
Remember what the jobs number looked like right at pandemic, with that first month when we lost 40 million or 14 million or whatever.
It was off the charts.
It was off the charts. And then we started losing 14 million. No, look, we had never had numbers like that.
Yep.
In our sphere, in our world at all. And then we started to say we were losing only 14 million and then only 10 million, right? The numbers were still bad and deeply painful, but if we were honest with ourselves, they were a function of a global economic shutdown due to a pandemic with no playbook. Same thing is going to happen here. If we stop for a second and understand why this is happening, goods and services have been, look, why is it happening? Let's talk about why it's happening. The world had to basically shut down all lines of production for any of these companies to survive going through a year of no demand, right? And so the restart of all those things and the supply chain and all of those things and getting things back online is going to be a painful experience. I think it is still, is inflation here to stay? Look, we've seen inflation higher. We've seen inflation lower. The market, as you and I know, we talk about it a lot, will be able to eventually adjust to all of this. Why are we going to sit there and hound the word? You know, it's like, are we hounding Jim Cramer for the fact that he recommended Facebook on Wednesday and PayPal on Thursday and they went down 100 points the next day? We're kind of beating everybody up over the last, you're only, look, on the floor of the exchange, one of the great old adages is you're only as good as your last execution. I looked like a genius when I bought IBM at 130 and it went to 150. And then I made one decision at the end of the day to buy something that ended up going down $2. And that was that will live in infamy. Transition or not transition, is it here to stay? Obviously, for some level, it's going to be here for a while. Right? I mean, look at the memes that came out of that transition story of guys where, Liquidity did a funny one, of taking the word transition to the grave with a bunch of guys from New Orleans dancing through the streets to the funeral. Look, it's a reality. We're going to have to live with it. The market will adjust to it. It's not good. It's painful. I would imagine it's more painful for people who are living paycheck to paycheck.
Yeah. All right. That's a valuable perspective to have, I think. Let's not all act like the sky is falling because it actually was falling for a minute there, and we threw everything we could at it, and it stopped falling. So
we got back to even in 3 months, Bubby. It took 9 years to get back to even from the 2007 crash.
Yeah, they learned their lesson. They learned their lesson. I don't envy policymakers right now. Peter Tuchman runs Wall Street Global Trading Academy. I highly recommend everyone check out that course. The link is in the description of this video on YouTube. Check it out. Peter, always a pleasure.
Great
talk to you again next week.
Yes.
There was a comment in the chat, and I apologize because I forget who said it now. It was about corporations and corporate greed and record profits. And I only bring that up now because I want to cite the stat that I saw this morning from S&P Global Market Intelligence. So yeah, on the one hand, you have record corporate profits. And on the other hand, though, you have every company under the sun blaming inflation and supply chain for their problems. Check out this stat. According to S&P Global Market Intelligence, words like including supply chains, logistics, and inflation have appeared on 71% of earnings calls for this earnings season. 71% compared to 39% of earnings calls at the same time a year ago. So everyone who can blame inflation and supply chain for their business problems is blaming inflation and supply chain for their business problems. But yes, you are seeing a lot of companies report record earnings, taking it to margin. Who was it? Was it Lennar or Lowe's? Some home builder-ish type company had record profits, and they asked what they were going to do with it. And they said, "Yeah, we're just going to take it to margin. We're just going to, pat our pockets." And that's not the kind of thing you want to hear right now. They're right to do it, but that's kind of shitty. But all right, we got to hop because live trading with Benzinga is going live right now. As soon as I'm done here, please do me a favor and hit that like button. We are at 367 likes. Get me to 500 likes today. That's doable. That's not that far away. 500 likes. What is it? 500 likes. Let's do that. Thank you to our guests, both Peter and Anne-Marie Baiynd. Thanks to all of you in our chat, but not the spammers. We don't like the spammers. Please remember all the information from our show is meant to be used as informational purposes, not for investing or trading advice. And we are ending the show right now. Live trading with Benzinga with Mitch, Ryan Zunaid, going live as soon as we are done here. This stream will end and redirect to those guys. Everyone have a great rest of your day. Have a great open, and we'll catch you later.